Do you have millions of dollars worth of real estate dreams, goals, and aspirations, but you don't have millions of dollars in your pocket? My name is Sam, and I have cracked the code to raising millions of dollars to invest in real estate without having rich parents or family members, or even perfect credit. In the next several minutes, I'm going to spill all the secrets on how to raise money from 4 different sources that will allow you to do anything you want in real estate, whether that's wholesaling, big flips, small flips, buying single-family rentals, apartment complexes, self-storage facilities, whatever you're looking to buy. I'm going to give you 4 sources to raise those funds, and I'm even going to give you one at the end of this video that you can call or go to their website to raise however much money you want. I'm sick and tired of you, well, not just you, everyone out there having excuses to not invest in real estate because they don't have the money. At the end of this video, you're going to have the path to find the money. Here's the ugly truth. 8 out of 10 real estate deals don't move forward because of lack of funding. Whether that number's slightly inflated or not, I know a ton of people that don't do deals because they don't have the money or they don't know how to find the money. And the worst part is, and after this, I promise I'm done poking and pouring salt on an open wound if you haven't done a deal, is it's not only not raising money, it's what happens after you don't raise the money. If you've passed on a deal because of lack of funding, and I know you have if you're a real estate investor, it's not just about missing on the deal, it's about missing on the tens of thousands or hundreds of thousands of dollars worth of profit that you could have had by getting the money to do those flips, or the millions of dollars worth of equity that you would have in rental properties if you knew how to properly raise the money. So you not knowing how to raise money is not only costing you the deal, it's costing you the potentially hundreds of thousands of dollars or millions of dollars of equity because you don't have the money. All right, enough of that. Hit the like button now if you're ready to learn how to raise money to invest in real estate. Let's get into the 4 ways that you can raise money and how you can raise it. Coming from a guy who's bought $50 million worth of real estate without using any of his own money, because I know what I'm getting ready to tell you. There are 2 types of buckets of money that you need to be looking to raise. One is the short-term bucket. This is for purchasing and rehabbing properties. The second is the long-term bucket. This is for financing rental properties only over a long period of time at a low interest rate that will allow you to cash flow by collecting rent, paying your mortgage, and all expenses. Sometimes you need both of them. Sometimes you just need one of them. Let's go through the scenarios now. Rather than making you wait to the end to get the golden goose of raising money, I'm going to give it to you now because I know the rest of the topics are just as powerful. The number 1 place you should be going to raise money to buy real estate is private money lenders. Now, private money lenders are normal, everyday people. They're W-2 corporate employees. They are not usually a rich parent. They are never somebody sitting with tens of millions of dollars in the bank like most people think. You see, most people don't find private lenders because they don't know where to look. You look in your phone, you look at your church, you look by talking to people at your work, by people in your family, your friends, and your just general connections and acquaintances that you have. A typical private money lender is somebody in their 40s, probably 50s, with a normal W-2 corporate job. They have a 401k that they've been contributing to, they have an IRA that they can't touch until they're 60, they've lived in the same house for the past 15 or 20 years, they have kids in high school or college, and they are looking at retirement in the next 10 to 15 years. That is your typical private money lender, not the mafia and not a rich parent. You see, the reason these people are your private lenders is because they have access to money that they maybe know or don't know that they can lend to you. For example, if they've lived in the same house for the past 15 or 20 years, the house is over doubled in value because real estate doubles in value every 15 years. So if they haven't done a cash out refinance recently or haven't done a home equity line of credit and used that money recently, they can tap into that equity and lend it to you via a home equity line of credit. Let's say their house is worth $600,000 and they owe $200,000 on that house. That's $400,000 that they can tap into a percentage of that and lend it out to you. They borrow it from the bank at 6 or 7%, lend it out to you at 10 or 12%. They make money on the spread, they lend it out to you, and then they have an additional income stream that they didn't have by letting that equity just sit there. Or they have an IRA that they can't touch until they're 59 and a half that they can self-direct and lend to you. They've been contributing to it for years, so it's probably pretty substantial, yet it's just sitting there there doing nothing. There are simple programs that I'm going to show you at the end of this video that they can use to tap into that IRA and lend it out to you even before the 59.5 and make money on it. Also, there are simple programs out there to allow you to borrow against a 401k and lend out to somebody. The point is, there are a lot of different programs out there and a lot of different ways that these normal everyday people can access money and lend it to you. Now, I do have scripts and conversations that you can have that you get access to for free in the description of this video to find private lenders, but wait until the end. I'll remind you of all the freebie giveaways at the end of this video. These private money lenders are primarily going to be used for the purchase and rehab of distressed property. You can purchase them, rehab them, and flip them. You can purchase them, rehab them, and refinance them and keep them as long-term rental properties. But regardless, having these private lenders in your pocket will allow you to do the first part, the hard part, which is funding that distressed properties, because banks and long-term financiers do not want to lend you money on distressed properties. That's not the space that they're in. They only want to lend you money on properties that you have rented or that you're living in. Before we move on to option 2 in the short-term financing bucket, let me tell you and drive home the point of my private money lenders being normal everyday people. My private lenders are 3 insurance agents, 2 engineers, a sales manager, a teacher, a firefighter, a nurse, an architect, and 3 entrepreneurs with pretty good amount of money. But the point is, again, they're normal everyday jobs. They're normal everyday people. They're just at a point in their lives where they have access to money that they may or may not know they have access to that they can lend to you. And they're going to lend it to you because they know you have a relationship with them, and is backed by real estate. And you're giving them a double-digit return. All right, that's the most important one to get access to. It might take you a few months to find your first private money lender. It took me 6 months to find my first private money lender. After several wrong conversations, several bad pitches, I was finally able to tie one up. So it might take you some time to find your first private money lender. In the meantime, there is another short-term funding source that I'd like to introduce you to, and that is hard money lenders. Hard money lenders are businesses that are in business to lend you money. Private money lenders are individuals that you know. Hard money lenders are businesses. So naturally, there are going to be a few more guidelines. Private money lenders, there's no underwriting, there's no credit check, there's nothing like that. Hard money lenders, again, is a business, so they are going to do a credit check. They are going to do an income check. They are going to underwrite the deal, which is a positive. You will have a second set of eyes on your deal, and they will only lend you money if it's a good deal. So that one's a positive, and they are a little bit more expensive because they're not lending you their money. Usually, they have a big rental portfolio that they have a line of credit on that they lend out to you, or they're borrowing money from some type of hedge fund or family office at a very low rate and then upcharging it and lending it out to you. So they're going to want to have some more security than a private money lender would have. A typical private money lender will give you 100% of purchase and rehab. A typical hard money lender will give you 80 to 90% of purchase and 80 to 90, maybe 100% of rehab. So you're going to have to come up with some money, either on the purchase and potentially the rehab, or just on the purchase. And sometimes they even want some liquidity. Again, it's not the end of the world. They are willing to lend, and they are in business to lend to experienced and new real estate investors, and they are a great resource for you to have. I'm going to give you a resource at the end of this video of an actual hard money lending company that will lend you money. However, just know you might have to get creative on that front end. You might need to bring $20,000, $30,000 to the table, which hopefully is not the end of the world, because once you sell it, you're going to get that $20,000 to $30,000 back, or once you refinance, you're going to get that $20,000 to $30,000 back. So that liquidity that they require as a down payment or just sitting in the bank is only being used in the short term. You can use a private money lender for that gap funding, as we like to call it, or there are a ton of other resources that you can use, like maybe your home equity line of credit, or maybe some type of business credit, or even your cash. So private money lenders and hard money lenders are your short-term funding bucket. Let's now move on to your long-term funding bucket. And this bucket is only applicable if you want to own rental properties. So if you own rental properties, or your goal is to own rental properties, you're really going to want to pay attention to this long-term funding section. It's actually easier than the short-term funding section. And if you're not interested in owning rental properties currently, I would still suggest listening, because you're never going to create any ounce of wealth by just flipping or wholesaling. In order to create wealth, you need to have a long-term assets that you own over a long period of time. So you're going to need long-term funding. The first long-term funding source that you're going to need to get to know and build a relationship with is small local banks. Small local banks are your community banks. They're not your Bank of America's. They're not your Commerce banks. Those banks don't want anything to do with real estate investors. However, these small locally owned banks, like First State Bank of a certain county, or a certain bank that has a certain city name in it, those are the types of banks that are locally locally owned and operated. Usually they have 5 to 10 branches that stay in business by lending money to you as a real estate investor. They're small local banks and they lend to small local businesses. They'll lend to that hair salon, that local auto body shop, but they will also lend to real estate investors. The reason they do that is because they hold their notes in-house. If you have a mortgage on your personal house and you got that with Bank of America or Wells Fargo or Rocket Mortgage, those institutions don't own your loan. You sign on the dotted line over 30 years at a certain interest rate, and then they sold that loan off on the secondary market to Fannie Mae or Freddie Mac and made a little bit of money, but did it a lot of times and made a big profit. These small local banks do not sell off their loans on the secondary market. They hold their loans in-house. Think of it like having a rental portfolio of properties. They have a rental portfolio of loans. They borrow money from the government at X percentage, they mark it up slightly, and then make that little bit of return every single month throughout the life of the loan with you. Now, of course, they make some money by actually doing the loan in the first place, but in general, the more loans that they have, the more little bit of money that they're making every single month adds up to their profit centers. They will probably do residential 30-year mortgages, but these commercial mortgages that you're going to be getting on single-family rentals and apartment complexes from these small local banks, those notes are held in-house, and that's a big profit center for them. You can also find them by joining your local real estate investing Facebook groups and meetup groups, because there's probably someone from a bank that wants your business inside those groups. Typically, these small local banks are going to give you a mortgage for slightly higher than you can get on a 30-year residential rate. So whatever the 30-year residential rate is, just add 1% or 0.5% on top of that. That's probably what you're going to get from these small local banks, and they will most likely do it over 25 years, maybe 20, preferably 25. The longer you finance it, the lower your monthly payments will be. I had a vast majority of my loans with small local banks for the first 8 years I was a real estate investor. However, if you're paying attention to the news at all, you know that the Fed's funds rate has gone up drastically over the past couple of years, and that is the benchmark that these small local banks use to lend you money. So the fact that they're more expensive now, I have moved on to the second option in this long-term funding bucket, which is DSCR lenders, which means debt service coverage ratio lenders. These are national lenders that will lend you money based on if the actual property will service the debt, hence the name DSCR or debt service coverage ratio. They look at the property. Of course, they're going to look at your personal stats a little bit, because they're going to give you a 30-year mortgage, not a 20 or 25-year mortgage like a small local bank will do. They're going to give a 30-year fixed rate mortgage, and they're going to heavily weigh if they're going to do that or not based on if the property produces enough cash to cover the debt and expenses. They're looking at it as an asset-based lending, as opposed to some other lenders that look at it as more a borrower-based lending. I have refinanced with a few different DSCR lenders and got much better terms that I could get at small local banks. I'm going to introduce you to a national DSCR lender here in a minute that has some of the lowest rates and best terms in the country. The majority of my 2,000 students are using DSCR lenders these days. They allow you to cash flow more by having a longer loan at a lower interest rate. The DSCR lenders don't use the Fed's funds rate as a benchmark to lend you money. They're able to get right now in the mid to upper 6s, which small local banks are usually in the mid to upper 7s. So that 1% makes a huge difference over 25 or 30 years and puts a lot more money in your pocket now. You can always pay more if you want to pay it off sooner, but having the ability to pay less is huge. And they're fixed. Small local banks have 3 to 5 year floating rates, meaning in 3 to 5 years, the rates will reset based on the market. DSCR lenders will lend you over 30 years at a fixed rate that will never change. Before I tell you all about the resources and introduce you to a hard money lender and DSCR lender that will lend you money, assuming you're qualified and the property qualifies, let's quickly recap. If you need short-term funding to buy and rehab a property, whether you're going to sell it or refinance it and rent it, you should be looking for private lenders and hard money lenders. Private money lenders are found through relationships you have and opening people's eyes to the fact that they can lend you money. Hard money lenders are found by waiting a minute for me to introduce you to one, but also just by Googling hard money lenders near me, their local ones and national ones, and asking other investors. If you decide to keep the property as a rental property, you're going to want a long 25 to 30 year mortgage. At that point, you're going to get a cash out refinance from a small local bank or a national DSCR lender. Small local banks are community banks that are in business to lend you money as a real estate investor. Their terms are decent, but not quite as good as DSCR lenders that are filling the gap and have a lower interest rate over a longer period of of time. All right, that's how you raise money. There's a lot more nuance to it. That's why I have a community mentorship. That's why I have thousands of videos on this channel to help teach you how to do these things, because one video can't cut it. So make sure to poke around this channel and find other videos that you can learn from. All right, in the description of this video, there's going to be a free training that will walk through a little more nuance and detail of how to raise money and give you an opportunity to chat with my team about how we can help you raise money. There's also going to be a link to FasterFreedom Capital, which is my national hard money lending company as well as national DSCR lending company. I have a very unique relationship with a family office that has $20 billion that they're able to lend out. So I am doing loans on a short-term basis for a fix and flip as well as a 30-year DSCR loan for the lowest rates in the country. I don't mark them up. I pass on the rate directly that I get. I don't mark them up. It's usually just a resource for my students. However, I'm willing to give it to you. If you go to the description, there's a form there for you to fill out, and my team will reach out to you and see if we can help fund your deals at a very low rate to allow you to make more profit and more cash flow. If you appreciate this video at all, please hit that like button, subscribe, and share this with a friend that you want to invest in real estate with or that you think can learn from this. See you on the next one, and check out this video over here to learn more about real estate.